You opened your credit reports. 2 words. Charged off. And immediately the questions start. They wrote it off. So do I still owe it? If I pay it, does it disappear? Why is another company calling me now? Those are different questions, and guessing wrong can get expensive. Because a charge-off is not one moment. It is a chain of events. Tonight, we are following the account. Before the charge-off. At the charge-off. After the charge-off. If it gets sold. If a creditor appears. If you pay. If you settle. If you do nothing. And most importantly, what all of that can mean for the house, apartment, car, funding, or fresh start you want next. The expensive question is not only what happened, it is, what do I do now? Welcome to the Real Credit Talk Show, audio edition. I'm your host, Tiana Mayers, also known as Lady T. Let me try that again. Founder of Beyond Credit Limits Corporation. And this is where we break down how credit actually works. Not from opinion, not from guesswork, but from how the system is designed to read you. This is a Beyond Credit Limits production. If you want to understand how your situation connects to what we talk about here, visit www.beyondcreditlimits.com. And if you've been tapped into the brand, you already know what it is. www.thatmerchmood.com. This is a space where we stop repeating credit myths, stop chasing surface level advice, and start breaking down how the system actually works. Not the watered down version, not the social media version, not the version people throw around without context. The real version. The structured version. The version that helps you understand what is actually happening when your name, your information, your accounts, your behavior, and your decisions all come together inside a credit profile. So wherever you're listening from, I want you to settle in. Because this conversation is not just about credit. It's about how your profile is being read before you ever get an answer. Now let's go. Today is not about your credit. Let me say that again. Today is not about your credit. Today is about the conversations that happen without you. Have you ever wondered why one day everything seems normal and then suddenly something changes? A letter arrives. A balance looks different. A lender says no. An account doesn't look the way it used to. Most people think those moments appear out of nowhere, but they don't. Long before you ever saw the outcome, someone was evaluating the account. Not your personality, not your intentions, not the reasons life became difficult. The account. Think about that for a second. while you were working, raising your family, building your business, paying other bills, trying to survive, another conversation was happening. A conversation you weren't invited to. Not because somebody was trying to hide something from you, because that's how businesses operate. They evaluate, they review, they assess, they make decisions, and eventually they reach a conclusion. Today, I don't just want you thinking differently about an account. I want you thinking differently about the decisions that are quietly being made long before most people know they've actually happened. Welcome to episode 15 of the Real Credit Talk Show. Ow. Ow. I'm Tiana Mayers, Lady T, and today we're going somewhere very few people ever get to go. Today, we're walking into the room where decisions are made. Because once you understand that conversation, you'll never look at your financial story the same way again. Here is the part people almost never think about. A charge-off is not only about missing payments, it's also about what the creditor eventually decides the account has to become. At first, you may still be thinking like a customer. I have an account with them. I'm going to catch this up. I'll call when I have the money. But internally, the account may no longer be moving through the system like an ordinary active account. That shift matters because your relationship with the company can feel exactly the same from your side. While the account is being categorized very differently on theirs, that is the part people don't see. Nobody sends you a big text saying, hey, just so you know, the way we were viewing this account internally has changed. You usually discover the result later, on a statement, on a credit report, during a loan application, or when you call expecting one conversation and realize the company is having a completely different one. You still think you are trying to save an account. They may already be managing a loss. Sit with that. Same account, two completely different perspectives. Have you ever called a creditor expecting to make arrangements and realize the options you thought were available were no longer on the table? That is the gut check, because timing changes leverage. And when you do not know how the account is currently being treated, you can walk into the conversation using yesterday's assumptions. Let me say something real quick that you might find a little funny. Fat Joe, the rapper, if you guys know, said something a while ago about yesterday's price isn't today's price. And so I want to say that right here in this situation, this is where that applies. So again, I'm going to just repeat that. When you do not know how the account is currently being treated, you can walk into the conversation using yesterday's assumptions. That can cost you options. Again, yesterday's price isn't today's price. It can cost you time, and it could leave you making decisions based on a relationship with the account that no longer exists. So the correction is simple. Stop asking only, how far behind am I? Also ask, what is the account status now? And what options actually exist from this point forward. Then the phrase appears, charge off. It sounds like cancellation, like the creditor said, we're done here. That is not what the phrase automatically means. A charge off is generally an accounting treatment after serious delinquency. It does not by itself mean the obligation vanished. One person sees it and thinks, good, it's over. Another pays the first caller. Another disputes it repeatedly because somebody online said, never pay a charge off. The label tells you something happened. It does not tell you everything you need to know. If I asked who owns that debt today, could you answer confidently, who? Acting on outdated assumptions can send your money or your effort in the wrong direction. Identify the original creditor, current owner, current balance, current status, and current reporting first. This is where charge-offs get really interesting. Not because of another company, not because of who bought what, because of the gap between what you remember and what the credit file is showing today. You remember the account one way. Maybe you remember the original limit, the payment you used to make, the month everything went left, the last conversation you had with the creditor. But a lender is not looking at your memory. They're looking at what is reporting now: status, balance, past due amount, payment history, remarks, dates. And sometimes those fields create a picture that feels very different from the story in your head. That is where people get blindsided because they think, I know what happened with that account. But knowing what happened in your life is not the same as knowing how the account is currently presenting on your credit reports. And here is the gut punch. You can be completely honest about your story and still be completely wrong about what the file is saying. That matters when somebody else is making a decision from the file. An apartment screening, an auto lender, a mortgage underwriter, a bank. They are not hearing the version you replay in your head. They are seeing the data in front of them. So ask yourself, when is the last time you looked at the actual account details? Not just the score, not the alert, not the little red arrows, the account, field by field. Because the cost of an information gap is reacting to the wrong problem. You may think the issue is that the account exists. The real issue may be how the balance is showing, the status, the dates, an update that never happened, or something that does not match across the reports. The correction: do not investigate the account from memory. Investigate the account from the data that is actually being used to evaluate you. This frustrates people. Trust me. Again, I'm a candidate because I am a consumer just as yourself. I paid them. The balance is zero. Why is it still on my credit? Because paid and deleted are not synonyms. Payment or settlement can change what is owed. Neither automatically means accurate historical reporting disappears. So basically, like I tell potential clients and clients that I have, or people from the past, really anybody who is inquiring about credit services. When you are making payments and the payments that you are making were in fact late, just because you make the payments, even a collection, just because, or charge off, or repossession, or bankruptcy, any of that in any way, shape, or form, once it is that you are late, when you make these payments, it does not reverse what actually reported. When it is that you're paying off for collections or charge off, it does not erase what again was already recorded. It remains. So it shows the before and after. Like, okay, you were late this month, but you're not late now. You're current now, but you were late. So it's like a report card. When you go to school, and I don't know how it is now, but back in the day, it was, you had the A's and B's. Reading was A, B, C, F, whatever it is. But in any event, it's something of that nature. So it doesn't remove past or prior recordings. Picture having $3,000 saved for a move. A collector offers a $1,900 settlement. You assume paying means deletion. So you pay. Let's say it's from like Capital One. I'm going to say that because everybody knows Capital One, right? So you pay. The account updates, but remains as is. It's still potentially negative. That's how it's showing. Now you have $1,100 and still need deposits, moving costs, and utilities. A zero balance is an outcome. It is not a guarantee of a deletion. Before money leaves your account, what exactly are you expecting to change? People can drain cash reserves chasing a result nobody promised. Understand the expected outcome. Document applicable terms. Verify the update and connect the decision to your goal. Social media loves absolutes. Never pay collections. Always settle. Pay everything in full. Dispute everything. Meanwhile, your actual credit file is sitting there like, does anybody want to ask me what's going on? There is no responsible one-sentence answer for every charge-off account. Ownership, age, reporting, documentation, applicable law, legal activity, cash position, and your immediate goal can all matter. The same type of account can require a different strategy on a different profile. Are you solving a debt or positioning for a goal? A completed task can still be strategically wrong. Stop asking what everybody does with charge-offs. Ask what makes sense for this account, this profile, and this goal. Here is something people rarely prepare for. A charge-off can stop feeling urgent to you long before it stops influencing financial decisions. Life moves on. You change jobs. You move, get married, start a business, have a baby, buy another car. Years can pass, and emotionally, that old account feels like it belongs to another version of you. But financial systems do not experience time the way people do. You think, that was back when I was struggling. That was back in the day. A lender may simply see serious derogatory history. That difference can feel unfair because you know how much has changed. Your income may be way better. Your habits may be better. Your life may be completely different. But if the rest of your profile has not been positioned to show you that recovery clearly, the old negative can still carry more weight than you expected. That is the real conversation here. Not just how old the account is. What has your credit profile done since? Have you rebuilt positive history? Have you kept revolving balances under control? Have you avoided new late payments? Have you created enough recent evidence that the person you are financially today is different from the person that account reflects? That is the gut check, because waiting is not the same thing as rebuilding. Time passing by itself is not a strategy. And the cost of doing nothing except waiting can be years of expensive approvals while you keep saying, but that's an old account. The correction: do not build your plan around hoping an old negative becomes less important. Build a stronger current profile around it. Give the next decision maker more recent positive information to evaluate, because your credit history may remember the crisis, but your current profile should also show the recovery. We'll be right back.
Most people think credit is just a score. It's not. Your credit can affect where you live, what you drive, your interest rates, approvals, deposits, business funding, and even the opportunities available to you. At Beyond Credit Limits, we help consumers understand how the system actually works. This isn't about gimmicks. This is about structure, strategy, education, and financial positioning. Whether you're trying to rebuild, organize your financial profile, understand collections, prepare for home ownership, or create a stronger financial foundation, Beyond Credit Limits was built to help you move with intention. The consultation is where everything starts. We will review your situation, identify what's happening inside your credit profile, and map out the next steps based on your goals. Stop guessing, stop moving blind, and stop letting misinformation cost you financially. Visit www.beyondcreditlimits.com and fill out your consultation today. Again, that's www.beyondcreditlimits.com. Beyond Credit Limits, because financial freedom starts with understanding the system.
And we're back. Now, let's talk about where this stops being a line on a credit report and starts affecting real life. The apartment. You found it. Right neighborhood, right price. You already mentally put the couch in the living room. You applied. Then an additional deposit is required or not approved. Now an account you stopped thinking about years ago is standing between you and where you plan to live next month. The account may be old. The consequence can be brand new. What goal are you assuming your credit is ready for without actually checking? Application fees, higher deposits, lost units, another lease renewal somewhere you were trying to leave. Don't wait for the decision to discover the obstacle. Know the profile before the deadline. Your car dies. You need work transportation by Monday. Now you're sitting under fluorescent lights hearing, "We got you approved." Beautiful sentence. Until the payment is $812 for a car you did not even love. Now you're negotiating from desperation. Approval and affordability are not the same victory. Are you trying to get approved or approved on terms that make financial sense? A higher rate follows you every month. Prepare before the emergency when possible. Know what is hurting the profile, what can realistically improve, and the timeline before you shop. People do not just picture a mortgage. They picture the kitchen, the backyard, their child's room, the key. Then somebody says, you need to address these accounts. Now panic starts. Pay this, settle that, dispute this, close that. Stop. A mortgage goal needs sequencing. The broader qualification picture matters. When the goal is big, random movement becomes more dangerous. If you want to buy within 6 to 12 months, do you know your actual qualification obstacles today? The wrong move at the wrong time can delay the goal you were trying to accelerate. Work backwards from qualification. Identifying barriers, prioritize, move in the right order. You see on your credit reports, account status, charge off, $4,862. Balance, $4,862. Past due, $4,862. Another bureau looks different. Maybe the balance differs. Maybe dates differ. Maybe one bureau shows an update, another doesn't. Don't immediately scream, violation. Violation! No. And don't assume it must be right because it's on your credit reports. Compare the dates opened, payment history, relevant delinquency dates, balance, past due, status, remarks, furniture information. A credit report is data. Read the data before reacting to the label. Have you ever disputed an account without being able to name the exact information you believe was wrong? Vague disputes can create activity without clarity. Specific issues, specific evidence, specific objectives. Charge off means forgiven. That's a myth. Reality, not automatically. If I pay it, it disappears. It's a myth. Reality, not automatic. If it was sold, the original trade line must vanish. That's a myth. Reality, not necessarily. The facts and reporting requirements matter. It's old, so nobody can ever contact me. That's a myth. Reality, age alone does not answer every collection or legal question. Dispute it enough times, and they have to delete it. That's a myth. Reality, repetition is not evidence. My score went up, so I'm mortgage ready. That's a myth. Reality, a score is only one part of qualification. Every shortcut leaves out context. Somebody comes in convinced it's this charge off. Then we review the whole profile on the consultation. Maybe it matters, but maybe we also see cards at 97% utilization, a recent 60-day late, new inquiries, or a thin positive file. Now, the priority changes. The account bothering you the most may not be costing you the most. What if you spent 6 months fixing the wrong thing? Another year renting, another high-rate auto loan, another denial, another opportunity postponed. This is why I start with the consultation, not to tell you your credit score you can already see, to understand the entire credit profile, the timeline, and the result you're trying to reach. Now, we're about to get into one of my favorite parts of the show, which is questions from the community. If you want your question featured on a future show, send it to the Real Credit Talk Show at beyondcreditlimits.com. Include your first name and state or write anonymous. Maya, Washington. Lady T, please don't judge me. Laugh out loud. I stopped paying a card during my divorce. It's charged off and a company keeps offering a settlement. I can pay it, but I'm trying to move in September. Do I pay them or save for the apartment? Maya, I would not decide from the offer alone. You have competing goals, resolving the account and preserving cash to move. I would want to see ownership, reporting, the rest of your profile, and what the apartment screening may require before deciding where that money should go. Thomas, Nebraska. My score went up 47 points and then dropped 31. I swear credit be playing with me. What am I missing? Probably an underlying change. Balance, utilization, account updates, inquiries, aging, or derogatory updates can affect the scoring. The score is the reaction. Find the event. Pyra, Maine. I paid all my cards to zero because I want a house. Should I close them now so I don't use them? Pyra, do not make a blanket move right now before a major goal. Closing revolving accounts can affect available credit and utilization. The decision should fit the full profile and your habits. Matthew, Kentucky. My original creditor says charged off, but another company is collecting. Am I supposed to pay both? All right, Matthew, do not assume that. Identify the relationship between the companies, current ownership, what each is reporting, and the balances shown before making a payment decision. Elena, Rhode Island. My credit is bad. Like turn the lights off before you open my report bad. Do you work with people in the 400s? Elena, girl, let me tell you something. I have seen lower than that. I have worked with way lower than that. The lights for you can stay on. A low score tells me we need to look deeper. It does not tell me the whole strategy. I care about what it's creating, what positives exist, what changed, and what you want next. Andrew, Wyoming. Oh my Lord. Oh my God. My mom added me as an authorized user and my score dropped. Everybody said it would help. How? Well, Andrew, authorized user does not automatically mean beneficial account. High utilization, late history, or other account characteristics can make the result different from what you expected. Anonymous. The dealership said, I need a cosigner. My cousin said yes, but I don't want to mess her credit up. Should I try again first? Anonymous, what I would do is first find out why you were denied. Review the adverse action reasons, reports, income and debt picture, down payment and deal structure. Diagnose before adding another person to the obligation. Janelle, Atlanta. I paid a collection and my score barely moved. Did I waste money? Janelle, not necessarily. Resolving a debt and producing a particular score increase are different outcomes. Look at how the account updated and what else is influencing the profile. Terrence, Vermont. I keep getting pre-approved card offers. Does that mean my credit is finally good enough to apply? Terrence, not necessarily. Marketing or pre-screened offers are not guaranteed final approval. Ask whether the product fits your profile and goal before creating another inquiry or new account. All right, so let's bring it back. A charge-off is not the beginning of your financial story, and it is not automatically the end of the debt story. It is a point on a timeline. What happened before matters. What happens after matters. And what you do next matters. Do not reduce strategy to pay it, ignore it, dispute it, settle it. Those are just actions. Strategy asks which action makes sense here and why. The answer should connect the account to the full profile and the result you want. If you have ever sat in your card after a denial and stared at the paper, if you have ever refreshed a credit app hoping the number magically changed, if you have ever avoided opening the mail because you already knew it was about money, if you have ever told yourself maybe next year because credit stood between you and something you wanted, your next move matters. Not 50 random tips. Not another template you don't understand. Not another 6 months attacking whatever looks scariest. You need to know what your credit file is actually saying. What is holding you back? What deserves attention first? What can wait? And how to connect to the results you want. If you're ready for that clarity, visit beyondcreditlimits.com and book your consultation. Bring the real situation, the actual reports, the actual goal, the actual timeline. Let's figure out what needs to happen next. And if somebody came to mind during this episode, send it to them. Sometimes the most valuable thing you can give somebody is information that stops an expensive mistake. The consultation is where we connect the dots, not just the credit score, the entire credit profile, the negatives, the positives, the reporting, the timing, and the goal, the home, the vehicle, apartment, personal or business financing. Whatever you are positioning for, the strategy has to make sense for that destination. Visit www.beyondcreditlimits.com to book your consultation. Before I close, I want to leave you with this. No question is insignificant. Your questions matter because you matter. Some of the biggest decisions that affect our lives are the ones we never see being made. Not because they're hidden, but because they happen quietly. Today's episode was never about taking you into a boardroom. It was about showing you that every financial decision has a process, every outcome has a history, and every credit profile has a story. If today's conversation made you think differently, don't let the lesson stop here. Keep asking better questions. Keep looking for better answers. And don't be afraid to understand your own financial story. Submit your questions to The Real Credit Talk Show at beyondcreditlimits.com. Include your first name and state, or simply write anonymous. Your choice. I read every single one. And your question may be featured right here on a future episode. Remember, understanding doesn't erase yesterday, but it can absolutely change tomorrow. Because every credit profile has a story. Every financial decision adds another chapter. And every chapter gives you another opportunity to move forward with knowledge instead of assumptions. This has been the Real Credit Talk Show, hosted by me, Tiana Mayers, also known as Lady T, and founder of Beyond Credit Limits Corporation. Visit us at www.beyondcreditlimits.com. And if you've been tapped into the brand, you already know what it is, www.thatmerchmood.com. Until next time, keep learning, keep positioning, and keep moving with intention. If this episode helped you understand charge-offs differently, share it with someone who needs it. Follow The Real Credit Talk Show on your listening app and turn on episode notifications so you never miss the next conversation. The Real Credit Talk Show is a Beyond Credit Limits production. Visit us online, www.beyondcreditlimits.com. Official merchandise, www.thatmerchmood.com. Thank you for listening. Have a good night.